we're probably looking for a different type of battery. And this isn't just for cars, again, or for your phone. This is for the future of humanity. We're going to start storing more and more energy in big, enormous rechargeable batteries because you can't have a wind turbine, for example, without a big distributed energy storage system.
All right, everybody, welcome to the Angel Research Podcast. I'm your host, Jason Stutman, and we are here, as usual, to discuss the market's hottest stories and investment opportunities. We have Alex Koyfman with us today. Alex is an expert in microcap investing and emerging technology. Real quick disclaimer, nothing that we say here today is personal investing advice. We can give you the tools and the insights that you need to make great trades, but we can't make these trades for you. Also, like, comment, subscribe, yada, yada, yada. Alex, it's great to have you here. Welcome to the show.
Thanks for having me.
Sure. We always have unique and exciting stock picks coming from your end. I kind of like to start these off with just a little bit of background. Maybe you can tell people how you got into the investing space, a little bit maybe about the services that you run, what got you into microcaps in particular, and we can go from there.
Okay, sure. How I got into investing to begin with, kind of an interesting story. Back in the early 2000s, there was a company called WorldCom, which you probably don't even remember. I'm assuming a lot of our readers do remember it. But anyway, it was one of the biggest tech companies of its time. I think its valuation before its collapse was something like $80 billion. And so anyway, long story short, a bunch of fraud happened. And
what did they do, or what did they supposedly do?
Telecommunications and various emerging technologies around the internet. I remember hearing that the company's valuation was largely based on theoretical ideas that they were having about what they might make in the next couple of years. But anyway, the whole thing fell apart. The stock collapsed into the penny range, the single penny range. And I remember thinking to myself, this company was valuated at $80 billion just a couple of weeks ago. Now it's trading in like the $30-50 million range. There must be some sort of inefficiency here. I wasn't by no means had any experience with finance or human psychology, which I think plays into finance a lot. But I could see that there was an inefficiency here. People panicked. They tried to get out as quickly as possible. And so, lo and behold, you have a 7-cent stock that shouldn't be there. And so I remember my first E-Trade account ever was registered just so that I could buy the stock at 7 cents. And I did. I had several $1,000s saved up. And so I kind of put the whole thing into WorldCom at 7 cents. And within a couple of days, it had bounced back to like 35 cents, which is, it's a fivefold gain, which is huge by any standards. It was very liquid. It was trading millions or tens of millions of shares per day. And so I was able to sell at close to the top. And then, of course, I got greedy and waited for it to fall back again and rebought. And I think this cycle happened maybe 2 or 3 times before finally news of the company's reorganization, long story short, bankruptcy, came down, at which point the shares lost all value. And I'm pretty sure most of my investment evaporated with that also. But it sort of lit that fire. So for better or for worse, that's how it started. I like to think that my decision making is a little bit better nowadays.
I was gonna say, are you still kind of 100% in microcap stocks, or have you kind of matured over the years? And maybe what are some things that you've learned, from those mistakes, and in terms of, because I know that you kind of have this big people look at penny stocks and they think like high risk, scammy, and you kind of have this big mantra about de-risking. You want to stick in this arena, but you want to minimize your risk. So maybe you could tell the audience a little bit about how you do that.
Of course, there's a lot of risk. In the U.S. markets, you don't see too many companies that are public at a valuation of less than 9 figures, less than $100 million. That's where the cutoff is for microcaps. It's I think 100 to 200 million is a microcap. Then below that is nanocap, and then you get small cap, and so on and so forth. To answer your first question, yes, I am more diverse nowadays. I just it's impossible to put everything into a couple of penny stocks and still call yourself sane. It it is a form of gambling, no matter what, no matter how you look at it. If you do it properly and de-risk it properly, the chances are definitely on your side of the table, and not the house's side of the table. But yes, I do invest in bigger companies these days, like the classic buy and hold or just forget you even own the stock.
Sure.
I do that. I have a retirement account that's completely, very conservative type stuff. But I'm still mostly interested in the microcap space. I hate to say it, a lot of it is because of the excitement, because you do get double-digit percentage changes on a daily basis. That's not even strange. It's not uncommon. It happens all the time. Any bit of news can send a stock up or down substantially. It's something that I think most people who invest their hard-earned money, they can't really stomach that. I can, and I've done it fairly effectively over the last 10, 12, 15 years, and I have built a pretty good portfolio and a net worth and everything using primarily these more risky stocks. Now, how do you de-risk? The first thing is, in my opinion, you stay away from some of the most fraud-prone industries. And we see a lot of that in the mining space, specifically Canadian mining companies. Not that there aren't good ones, I don't want to say that, but it seems to be a place where a lot of people who set these companies up, they may not be, completely...
What's up with Canada? Like, why are there so many of, like, is it regulation? What's going on
So
there?
in Canada, I don't know if it's regulation. I think it's mostly the culture, the economic, financial culture. They do have a lot of companies that are publicly traded they have valuations in the single, double digit millions. So what would be considered a nano cap here on the TSX, for example, TSX Vancouver isn't abnormal at all. Their average, and don't hold me to this, but their average valuation is probably somewhere in the $50 million range.
Okay.
Which here would be microscopic, but there it's fairly common. A lot of those companies have mirror listings here in the U.S. on the OTC, so you can buy shares of a Canadian company, for example, on the U.S. OTC. It's going to be a slightly different price because it's American dollars as opposed to Canadian dollars. It might be less liquid because most of the investors are buying the Canadian listing, but you can play that game using just your normal Scottrade, E-Trade, Ameritrade online brokerage platform. So Canada is like the center of the universe for microcap public companies. In the U.S., most IPOs you hear about are way bigger. Like I said, hundreds of millions, billions of dollars. That's what you hear about there. Going public at $10-20 million isn't crazy at all. And so, if you want to get into it, it's best to know something about what's going on over there.
And to know some people over there, I assume. Like, do you have some contacts, or how do you generally find a stock? Are you kind of just like running a screen? Do you have personal contacts who are feeding you that information? Or
I do a combination of all those. I used to run lots of screens, and just the classic route to sort of sifting through companies. But deeper I got...
Educate some people. What is your classic route for doing that?
One of the things I say is avoid microcaps that pay out dividends, for example, because
Sure.
it just goes against their model of growth to be doling out profits. So that's one thing.
Do you need profitability?
No.
Are you looking for...
No, not always. That's the thing. With companies at this stage of development, profitability is, I would say, almost a rarity. These companies are development stage. They're basically startups. I like to tell people when I'm getting especially romantic about it is that you're almost like a venture capitalist if you're getting into this.
Sure.
Because these companies really are, if you were to go to Silicon Valley and find a company with a valuation of $10-20 million, you're probably looking at a couple of guys in an office. So, long story short, profitability isn't the number one thing, but some cash flow is good. Debt isn't good. You want You want gross margins, perhaps. This is all for heavily de-risked microcap stocks. So this is the way that I would find the ones that have probably less potential to grow, but less potential to fail as well. So getting back to your original question, as far as the contacts go, as I got more and more entrenched in this whole thing, I did start meeting people and building a network. And nowadays, I do get a lot of phone calls, and I get a lot of pitches,
Sure.
if you will.
Some more reputable than others, or
Yes, I do get lots of irreputable pitches.
how do you tell? How do you kind of discern the difference?
I mean,
between someone
at this
who's
point,
swinging bullshit and someone who's
there are certain people, just specific people that I avoid. That's probably my best sort of method for avoiding those pitfalls. But
Sure.
I I stick with people that I know are good and have done well before. And so, I consider these people friends. And when they tell me that, they're putting together something, even if it's like a gold company, something that I would definitely tread very lightly on, usually I would pay more attention to it. And so, it's reputation of people that I've known for years. So, that does play a big role.
Okay, so let's switch the topic of conversation to a specific stock that you've been teasing lately surrounding the I guess the energy space and energy storage in particular. I guess maybe it might make sense to kind of just frame this with a little bit of background about the lithium supply shortage that's going on in the world, and maybe you could give the audience some context about exactly what is going on with lithium demand, why is it increasing so much, and what are the potential pitfalls? Like, can we rely on lithium in the over the long run, or is there something else that we're going to need to do?
I guess, the short answer is no, we can't rely on it in the long run. The reasons being that lithium demand, as far as what the foreseeable plans are for things like electrical vehicles and renewable energy, lithium demand is supposed to go up something like 1,300%, I believe, is the statistic I was looking at, just by the end of this decade. And so that's considering that in the U.S. we produce, something like 10% of known lithium reserves are in the U.S. So you already have right there huge minefield of supply chain issues, right? The Chinese right now are buying up lithium mines. They know they can see the future. It doesn't take a genius to do it, and so they're buying lithium mines all over the world. They might control something like 70% of it by the time this time frame is over, and so. We're not on super friendly terms with them. It is likely to get worse in the next couple of years. So just for those two reasons already, lithium is kind of something that we're trying to get away from. Other issues with lithium is environmental impact. I know there was a statistic about how, to refine 1 kilogram of lithium, it requires X number of gallons of diesel fuel for all the big trucks and heavy equipment. I don't remember. I don't actually where I read all those statistics. It may have not been the most reputable source of information, but I mean it's a fact. It takes a lot to refine lithium, and one of the biggest things that it takes is water. And so, in an era where water shortages are a real thing, especially in the U.S., lithium production here is it's probably got a kind of a dim future. So those are on the production end. As far as lithium performance in batteries, mainstream applications like electrical vehicles, it's quickly becoming not acceptable to the consumer, I guess, for lack of a better term. Your Tesla, for example, if you have one, it's a lithium battery pack. It's got a maximum lifespan of something like 300 to 400 cycles, right? So 300 times you charge it, 300 times you discharge it. The most range they can get out of one of those battery packs today is about 400 miles, right? So if you do the math, the lifespan of essentially, like the power source for any Tesla is going to be something like between 120 and 150,000 miles. And then after that, you have to get a new one.
Sure.
They also fail, lithium batteries fail at sort of their own rate. Some of them have a lifespan of 350 cycles. Some others might have a lifespan of 450 cycles. They fail, they corrode, they charge slowly. It takes, even on the highest speed charger there is, it takes at least half an hour to charge it up to 80%. So that's actually one of the biggest stumbling blocks for people who are considering switching from ICE to EVs, is the amount of time they spend at the charging station.
Sure, yeah. So there's a lot of... Sorry, I'm losing my train of thought here. Okay, so look, obviously lithium batteries aren't going to cut it. What is the solution? Is the solution to go back to internal combustion engines? Is the solution to move on to something different? How do we actually fix this situation?
You're going to get different answers from different people. On the whole returning to internal combustion. Probably not, though. We're probably not going to go there. We're probably looking for a different type of battery. And this isn't just for cars, again, or for your phone. This is for the future of humanity. We're going to start storing more and more energy in big, enormous rechargeable batteries, because you can't have a wind turbine, for example, without a big distributed energy storage system.
Sure.
And
lithium's not ideal for that, right?
Well, no, I mean, lithium, those big batteries, those big, huge lithium batteries have all the drawbacks of a small lithium battery. So, no, that's not going to really cut it either. So what you need ideally is a battery with more capacity, a longer life, quicker charging, and more reliable, easier to produce. And so right now, going back to that company that we had been teasing, one of the potential solutions on the table is a graphene aluminum ion. So graphene, I don't know if everybody's familiar with this stuff, but it's a highly experimental, very new material. It's called a nanostructure, a two-dimensional nanostructure. It's carbon, and it was invented for the first time in the early 2000s, but its researchers, the two key researchers, won the Nobel Prize for it just in 2012. So less than 10 years ago, it was on that level of development. Sure. It costs a ridiculous amount to produce, something like $90,000 a kilogram. At least that was the traditional production method. But this stuff is like, otherworldly. It's magical. It's 200 times as strong as steel. It's as light as paper. It's one of the best conductors of electricity. Its thermal conductivity is off the charts. Its ion storage density potential, which is what makes it potentially good material for a battery, is also, it beats lithium by leaps and bounds. And so this was an experimental battery that one Australian company was developing. And it was the price of production of the graphene was really the big obstacle there.
Yeah, I mean, I've been hearing about graphene for years, but it seems that it hasn't materialized yet, at least, because the scalability of lithium is it makes more sense for these EV producers. So what is where is the breaking point for this, or what is maybe this company doing that kind of has you thinking that they might actually be onto something?
So what they're doing, which is potentially even cooler than the graphene aluminum ion battery itself, is that they managed to figure out a way to produce graphene for like orders of magnitude less than it was produced. So we're talking now single double-digit dollars per kilogram as opposed to that many thousands. And the way they do it, I'm not going to get technical about it because I actually don't really know much about the technical process, but how it works is they make graphene directly from natural gas and electricity. That's it. And there is very little to zero detritus. Like there isn't as much, there are no pollutants that result from this process.
Sure.
And they can mass produce it. They can produce it on a very, very precise level, so they can customize it for whatever they need. And specifically in batteries, the result is crazy. I mean, they first of all, the charge-discharge cycle life of graphene battery is going to be something like 3 times as much as a lithium battery. So, we're talking like 1,000 cycles now instead of 300 or 400. The energy density is 1.5 times as much, so you're gonna get now 700 miles to a charge. This is with existing electric motor technology. So
they also charge faster as well.
They charge up to 70 times faster. So you're talking about a full charge in less than a minute, which is faster than you can fill your gas tank. Which is, that right there, that changes the entire game for electrical vehicles.
All right, so this company is producing the graphene. They could do it for much cheaper than anyone that you're aware of. Are they waiting for like a big client? Are they supplying this to anyone right now? What's the blue sky scenario for these guys?
The stage that they're in right now is that they're producing coin and pouch batteries. So you know what a coin battery is? It's like the tiny circular. It basically runs your laptop's long-term memories. Even when it shuts down, it still maintains all of the internal data. So it'll go into your watch. That was the first thing they produced.
So they're starting small. That makes sense.
They're starting small. These are already production models that are rolling off their assembly line as we speak. And what they're doing is they're sending these off to various other corporations that would put them in their products just for testing feasibility. And so they started with those coin batteries.
What's the share price?
The share price, last time I looked at it, was like between $2.50 and $3.
Okay.
US dollars. So, that doesn't really say anything. You have to multiply the share price by the shares outstanding. But, the share prices already kind of gives you like a little bit of feeling of stability. You're not in the pennies. And, this company, again, $250 million. So they have a factory. This isn't just a couple of guys in a room talking shit and exchanging ideas anymore.
Sure.
They're heading where they need to head. They're not profitable, but, again, they're developing a world-changing technology that everybody can use, that everybody will benefit from, and hopefully it'll lead to a better future overall. So that's the kind of bet that I like to take personally. If it fails, I'd be very surprised, but that's the name of the game.
Sure. Yeah, everything has some risk.
Sure.
And if the audience or the listeners want to take that bet, alongside you, what would they have to do to
sign up for Microcap Insider?
You got some reports. What's what do they get if they sign up to Microcap Insider?
If they sign up, they will get the report that details that company that I just described.
Sure.
Name, ticker symbol, all the people that are doing all the work, the brain trust. The vital statistics, where the share price has been, where it is right now, all that stuff. It'll talk about the technology. It'll talk about the new method for producing graphene and why that's important, and kind of put that within the context of the grander market.
Okay, great. Well, we'll put a link in the description so that people can figure out how to sign up, figure out if the service is right for them. And Alex, thanks for being on the show. Everyone else, like, comment, subscribe, all that good stuff, and we'll see you next time.